Since the beginning of November, the S&P 500 ETF Trust, under the symbol SPY, or as we know it, the spider, has rallied 13.8%. So after a year of volatility and unpredictability, we closed the year on a high note. This is good news for investors in 2020. However, it could also be good news for investors in 2021. LPL Financial Chief Market Strategist Ryan Detrick said the closing 2 months of 2020 have been the best November and December for investors since World War II. But it turns out historically that 10% or more gain in the final 2 months of the year has meant a higher S&P 500 the following year, every single time since World War II. Moreover, January has also been higher every single time as well. So here's the data. During the 5 years, the S&P 500 gained 10% or more in the final 2 months of the year. The index averaged another 3% gain during the following January. Going out further, the S&P 500 gained at least 10.8% in the year following each of these 5 years, and the average S&P 500 gain in those 5 years has been 18.1%. Now, my take's a bit different. This year is going to be more challenging. We're going to have to play very hard defense. But don't worry, I know how. So let's take a look at two charts. And this first chart here is the 6-month daily on the spiders, the SPY, and the close on Thursday was 373.88. And as you can see here, last week we were talking about the potential reflection on up here off of that 20 EMA, and we got it. Now, it may be under low volume, but it's a reflection and a market heading higher, so I'll take it. Moving on down here into the volume, you can see that low volume here, but we had a tick up toward the end of the trading week. Now, into the MAC. This is a very important oscillator here. And as you can see, the fast line came through the slow line, moved on down here. But it looks like it's trying to bottom and base in this area. And it looks like the fast line wants to run through that slow line. And if that's the case, we're going to get that positive January as we indicated in the intro. But let's go down here and look at the other oscillators. Histogram, you can see the same thing. Nice bottom and basing, moving on up, just about to close through that zero line. Now, the price rate of change has already closed through with the fast line above that slow line and also above the zero line. So all things positive. Same thing here for the relative strength that actually bottomed here, actually twice, but most recently here, and it's been continuing on up, and it looks like it wants to move into that overbought territory. We'll see, but I think it's on its way. As well, stochastics look like they're doing fine. And then lastly, the Williams also looks good. Back up here to the price chart. So perhaps the introduction was correct. We're going to get a positive January, at least by the way it looks now. We're definitely going to head up a little bit higher here. But let's go to the next chart and see what the rest of the year may have in store. And we're now looking at the 15-year monthly chart on the SPY. And as you can see here, from 2009 all the way up to the current level, we've had a heck of a run. Very nice. But the things to keep an eye on are this megaphone formation, starting here, heading on down like that, and then starting here, heading up through like that. We have now broken up through that top trend line. So is this going to be a blow off top, or are we going to set a new trend line? That's one of the challenges. Now, if we do continue on, great. If we don't continue on, we could move back down here to where the 20 EMA is moving. So it might move up through there. So from that top here, there's a possibility that we can fall all the way down here and then maybe reflect back off of that. But if we continue on down, there's a possibility we can fall all the way to this lower trend line. So that to me is very challenging. Moving on down here into volume, looks like volume's doing fine. A little bit of a downward trend line there, but nothing to be too concerned about. Now, the next concern, though, is the MACD. You can see that the fast line is well elevated above the slow line. There is plenty of room, plenty of separation so that we can trade sideways, but if stock market gravity takes hold, there's a possibility that this could come on down like it did here, perhaps here. This was a short one. And then back here in 2015, that was a little tough. And this was in 2011, and that was a little rough as well. But we're elevated much higher than any of these other measures going all the way back. So perhaps the path downward could be a little bit troubling. Here into the histogram, we're going to watch this to see if the separation there starts to level out here, and that's going to be one of our early signs. Moving down here into the price rate of change, we have a double top there, and that's a little bit of a concern as well. The big concern also is the relative strength index from this top here back in early 2018 on down. Now, we finally have gone through that, but that's not too convincing to me. We are relatively weak given how high we are on the price chart. Keep that in mind. Stochastics looks like perhaps we're in the 7th or 8th inning. Moving down here into the Williams, we've done some sawtoothing. Probably will continue to do that here for a while. Moving back up here to the price chart. So those are the reasons that I think we're going to have a challenging year ahead of us. We're going to need to play defense. And if you want some help, stay with this channel. And for today, that's ChewDog Charts. Thank you.